And the Federal Reserve cuts the bench rate mark a quarter of a percentage point. The federal funds rate is now 1.75% to 2%. Now, Fed officials are not forecasting a rate cut this year, another rate cut this year. They're also not forecasting any rate cuts in 2020. They're seeing a rate hike in 2021. Now, a very divided Fed over the future path of rates. 3 Fed members have dissented on this. James Bullard, Esther George, and Eric Rosengren dissented. Now, Bullard wanted to see a 50 basis point cut. Rosengren and George wanted to leave the rates where they were. Now, in the flamed dot plot, 7 officials see 1 more rate cut this year. They needed 2 more to have that extra rate cut this year. 5 officials believe the federal funds rate should be at the same rate it is now. 5 would like to see the rate back at the level that it was before this meeting today. Now, the Federal Reserve raises their GDP forecast to 2.2% for this year. Federal also sees the unemployment rate nudging up to 3.7% by the end of the year. Core inflation, they do believe, stays the same at 1.8% by the end of this year. In the statement, everything was basically the same there, except they added the fixed business investment and exports have weakened, changing from soft. The Federal Reserve says they will act as appropriate to sustain the expansion. Now, on that short-term funding cost that you were talking about, Charles, the Federal Reserve lowered the interest or the excess reserves, the interest they pay on excess reserve by 30 basis points. The Federal Reserve sets it 20 basis points under the top range of the federal funds rate. The Federal Reserve also will continue those overnight repo operations to stabilize the federal funds rate. They set the rate on those overnight repos 5 basis points under the bottom of the Federal Reserve rate. So that's 1.7% to try and drag it down there, keep it within that federal funds rate range. The federal repo operations are being offered there, as I said, at below the median rate. There's a 1.7. So again, rate cut 25 basis points here to 1.75 to 2%, 3 dissents. And the last time that happened was in 2016, December of 2016. Charles?
Edward, real quick, you said he raised the GDP to 2.2%.
Yes, 2.2.
From where?
From 2.1%. So
okay.
It was just a really small incremental increase. You know, it is interesting that we had dissents in different directions, though. This shows a very divided Fed. The last time they had different direction in dissents was December of 2014, actually. That we had one going one way and one going the other, so which is what we saw here in this statement.
Yeah, and I think maybe we should have been bracing for that. Well, Wall Street now starting to get hit on that. Thank you very much, Edward. We appreciate it.